Assalamualaikum warahmatullahi wabarakatuh. My name is Nonwera Syara Bidung Ali and my numeric is S65518. So today I will show and explain about statement of cash flow. So the first step is we have to find a net change in cash and cash equivalent, which is we have to find in financial position cash. As we can see, we have a cash here, and then we have to begin ending balance of cash deduct with the opening balance of cash, and then we will get a net change in cash and cash equivalent. So as we can see, after we deduct beginning and ending and beginning, we will get increase. So when increase, we have to put net increase in cash and cash equivalent. So next step is we will for the first step we will be put profit before tax. So here we get from the financial position profit before tax. After that, adjustment we get at a statement of profit or loss and other comprehensive income, which is loss on sale of equipment, loss on retirement of bonds, and depreciation expense. And then we go to the change in working capital. For this one, we will see in the statement of financial position, which is the current asset and current liability. For this one, we have to ending balance minus with the opening balance. So the first one is inventory. As we can see, after we deduct to value here, we will get a increase in inventory. So when increase, we have to deduct. For this one, when current asset get increased, we have to deduct. When decrease, we have to add. For the current liability, if we get, as we can see here, income payable, after we deduct, we get decrease. So when decrease, we have to deduct. And then after inventory, we have account receivable, prepaid spend, and after that, account payable, the last one. After that, we total up, we get a cash generated from operation. So the next one is income. We find a income tax paid. So for the income tax paid, we find in first we find in statement of profit or loss and other comprehensive income, and in income tax expense. Uh, so income tax expense plus with a beginning beginning income tax payable minus with closing with ending balance of income tax payable, and then we will get uh 26,100, which is we get a decrease. So we have to, for this one, we have to decrease, we have to deduct, and then after that we will calculate the net cash flow from operating activities. Okay, and then we'll go to the cash flow from investing activities. For this one we will see in additional information. So the first one, if we get equipment costing 42,070 with accumulated depreciation of 22,200 is sold for cash. So we want to find a sold for cash. So we have to do some working. So we put equipment costing sold minus we accumulated depreciation, minus with loss on sale of equipment, we get in other segment of profit or loss and other comprehensive income. We get in uh here, loss on sale of equipment. So when it lose, we have to minus, and then we will after that we will get proceed from sold equipment after we equipment costing sold minus with the accumulated deviation and minus with the loss on sale of equipment. We will get a proceed from sold equipment, and then um and then we will put in the proceed from sold equipment, we put in cash flow from investing account 30,000 90 50 90,050 so 90 50. So we will we will go to the second additional information, which is equipment purchase are for cash. So we don't have a we have to find a cash how much we purchase for equipment. So we have to do some working as well. So we have to equipment costing sold minus with the net decrease in the equipment account balance. So here we get from the financial position equipment. After we find a changes here, we get a decrease. So uh, when we get a decrease, we have to minus, and then after total up this, we will get a purchase of equipment. After that, we will put in cash paid for purchase of equipment. If we want to be more careful, we want to find is it correct or not, we can do a T account for equipment, and then we will get a purchase here. So after that, we will go to the returning earning. We go to the in financing activities, cash flow from financing activities. For this one, we find in issuance of bond, which is we get from the current liability, bond payable, and lose on retirement of bonds. So we add up together and then get 76,050. So after that, we find a dividend paid. For dividend paid, we will see in additional information they give about dividends. So as we can see, returning earning is affected by declaration of dividend and net profit. So for this one, we will do some T account here for returning earning. We want to find a dividend distribute. After we will put a balance BD for returning earning and net income, and then we calculate. We will get a dividend distribute. Okay, after that, we have to add, we have to plus with dividend payable, which is we get the financial position for the in prior year. For the current year, we already paid, so we have a 19,000. So we add up together, and then we get dividend distribute add up with the dividend payable, and then we get how much we paid in dividend paid, and we will get a 37,50,000. 50 hundred. So after we calculate all of the change, all of the cash flow from cash generated formation, net cash flow from operating activities, we calculate net cash flow from financing activities and net cash flow from investing activities, and when we calculate net cash flow from financing activities, and then we will get a net increase in cash and cash equivalent. So we will get uh, the same the same one as here. So that's all for me. Thank you. Oh, 9 minit.